I have the great pleasure to be joined by Stefan Golling, Chief Underwriter at Munich Re. Munich Re is a leading provider of reinsurance, primary insurance, and insurance-related risk solutions, including in the cyberspace. At a virtual press conference earlier this month, Munich Re reaffirmed its commitment to cyber insurance and called out, and I quote, "Coverage for cyber risk remains one of Munich Re's most important strategic growth areas and fields of activity." Stefan, thank you for joining us.
Thank you, Pascal. Pleasure to be with you today.
Before we get to cyber, let's set the stage by looking at the outlook for the reinsurance market more generally. Munich Re's called out that there are stable levels of dedicated reinsurance capital, favorable pricing, in the context of low interest rates and also an economic downturn. From your perspective, what's the outlook for the reinsurance industry as a whole as we look forward to the next 12 to 24 months?
Yeah, look, I mean, on the outlook of the insurance and reinsurance industry, maybe let me comment as follows. I think there is quite some change going on these days, both in the insurance market as well in the reinsurance market. I think we're coming out of a period of continuous softening in the market from 2013 to maybe 2018, only stabilized maybe 2019, 20. We're coming out of a period of quite some severe nat cat years. So 17, 18, 19, we have seen a number of bigger hurricanes in the US. We have seen, I think, 4 quite large typhoons in Japan. We have seen other losses, so-called side perils, when you think about Californian wildfires, not only in recent years, now again. We have seen the wildfires in Australia, so a lot going on. And on top of those events, I think there's also some realization in the market that the current low interest rate environment will presumably stay for a while and will not change too soon. And off top of that, I think we have a number of factors that simply add uncertainty. On the one hand side, I think it's the US liability market with maybe some reserving uncertainty. Then, of course, when we think about current days, COVID-19, not only uncertainty for the insurance market, but uncertainty, I think, for all of us individually, but also simply as global economy. And then off top of that, if it wasn't enough, some systemic risks that are on the rise in our point of view. And pandemics is a good example. But today we will talk about cyber, certainly also a systemic risk that is increasing. And you could add, for example, also the climate change and the risk coming from climate change, but also the whole political environment at the moment with quite some civil unrest also. So I think these are a number of factors that have influenced the insurance and reinsurance market already, and they will further influence it. I think that will bring some discipline to the underwriters. And with increased discipline, of course, I expect clearly rates to harden, but also maybe not only on the price side some changes, also on the conditions, we think we can expect some tightening there as well.
Earlier this month, Munich Re estimated that it had a 10% share of a roughly $7 billion cyber insurance market, which clearly makes Munich Re a leader in this space. You've also publicly shared that Munich Re has a team of, and I quote, over 130 experts who develop cyber solutions for the entire value chain, from risk analysis and prevention to risk transfer. And that's in addition to your network of external experts and partners. I was hoping that you could comment about what's driving Munich Re's investment to secure this initial leadership position on the one hand, and on the other, given all of the uncertainty that you just mentioned, how an organization like Munich Re's continues that focus on this leadership position in a nascent space, given the uncertainties that are otherwise afflicting the broader insurance and reinsurance market.
Yeah, look, I think I'm proud to say that we accepted this cyber challenge maybe from day one. And I think we knew at that time, and we still know, that cyber is a challenge, a challenging risk, where we don't have 100 years of data like for so many other classes that we're operating in for many, many years, and that we will also face the one or the other, maybe even bigger or nasty surprise over the next coming years. But why did we accept the challenge? Actually, it wasn't too difficult because our clients told us loud and clearly what risks they are concerned about. And I think cyber in the last couple of years ranked higher and higher. So for us, it was really a question of, do we want to stay relevant as an industry? Can we really allow us to shy away from the cyber risk? And for us, it was clear that the answer has to be no. So if we want to stay relevant, we as an industry need to be able to offer solutions for our clients, not only us as reinsurers for our insurance clients, but really to the end customers. And that's exactly the reason, as you said, we have invested into our own people, the number of resources, but of course also the expertise. But I think also important, we have invested in partnerships with bigger tech companies, with smaller startup companies, with companies like yourself that of course can complement our own expertise and our offerings that we can bring then at the end to our clients. And I think overall, this is of course a journey. I think we are on a learning journey still. We learn basically every day. Also now during COVID-19, we've learned about cyber risk. But overall, I think we are well on track to develop a sustainable cyber insurance market overall as a whole market. And I think Munich Re, as you said, is well positioned, isn't it? I think our premium 2020 will increase, will exceed $700 million, which of course is nice. And if you allow me to maybe add a personal comment, how often in the times of an underwriter does it happen that you can actually develop a completely new line of business? Not only a one-off solution for an interesting problem of a client that maybe helps one or two customers, but actually a product that is really scalable. And that's just fascinating. And therefore, I'm also happy that I had the chance to be part of that journey.
You mentioned that there were a lot of learnings along the way. Let's get to COVID shortly. What have been some of the learnings from a Munich Re perspective on the cyber journey since you've accepted that challenge of insuring and reinsuring cyber risk?
Yeah, I mean, first of all, of course, we have seen that with the lockdown measures imposed by various governments, the industry had to react and had to change basically to a virtual setup, to business process being moved online, and that on rather short notice, and thereby maybe also the level of cyber risk has increased. So we have seen the amount of or the number of attacks, cyber attacks, ransomware attacks, phishing attacks increasing. And that's certainly something that we have to be aware of, and where we have also to think about whether the market also on the cyber side has to react, has to harden, has to adjust maybe also premium levels there. On the other hand, it's of course also almost a boost to the cyber insurance market. I mean, with this increased level of digitalization, I think there also comes an increased need for cyber insurance, and that should help us actually on our journey to really develop that market in a sustainable way. When you think about very specific lessons, I would say I have two things in mind. First of all, I mean, we talk a lot about at the moment about wording ambiguity when it comes to business interruption losses following the lockdown decisions. And that's, of course, something that we have to keep in mind on the cyber side as well. How clear are our cyber wordings? How clear actually are non-cyber wordings, so the property wordings, property business interruption wordings, and how would they react after widespread business interruption following a cyber attack? And I think the second thing is, of course, having mentioned systemic risk beforehand, as we realize that on the pandemic side, maybe some risks are too high or too big to be covered fully by the private insurance sector. I think the same is true on the cyber side as well. When you think about widespread business interruption following whatever the failure of the internet or the failure of an entire power grid after a cyber attack, then presumably such a scenario also can't be covered by the private insurance market only.
So I'd love to hear a little bit more about what that might look like, that public-private partnership from your perspective.
Yeah, I think we need to be always, of course, careful when we call for these public-private partnerships, because, of course, it must be in the interest of the insurance industry to cover as many risks as possible by ourselves in the cyber market and to offer solutions for our customers. But we also need to dare to tell our clients, our customers, to explain them if a risk is just too big to be covered. We need to avoid the solution that we always and only react after such a big extreme event and then basically cry for support by government. So ideally, we prepare that before, and we have proven that in the past when you think about terrorism pools in some markets, even some nat-cat pools in the market. Of course, there's always different reasons. And as we currently, of course, discuss on the pandemic side, that presumably for the biggest accumulations, we simply need a system where the vast majority of the losses is then picked up by governments.
I wanted to pick back up on the silent cyber business interruption issue, and this has been something that Munich Re has been driving the debate on this topic for quite some time. In fact, in July of last year, you were quoted as saying, "The risks coming from the cyber peril clearly exist and affect all industries, markets, and companies, and that the goal should be to make cyber coverage non-silent, either by providing affirmative coverage or by covering it at least consciously." I'm curious if there were any kind of particular lessons learned from the pandemic 12 months later, and also your view on how the insurance industry is doing on cleaning up and making clear some of that potentially silent cyber language and policies.
Yeah, I mean, as I mentioned, I think there is an immediate lesson from COVID-19 where we see that original policy wording, but also reinsurance wordings have not been written in the best way to respond clearly to what we currently see in the market. And this is a typical form of non-damage business interruption. And of course, this is exactly the same when it comes to potential cyber attacks and the consequential business interruption losses. So I think our customers, first of all, have the right to know what is covered and what is not covered. But also it's neither good from a reputational perspective for the insurance industry if that is unclear. And let's be honest, from a risk management perspective, it's even worse when we don't know whether at the end we have the capital to respond to the losses that we potentially cover. How is it going in the market? I think markets have been addressing this, also of course forced by regulators who are asking for getting our heads around it. Has it been progressed quickly enough? I would say the pandemic almost tells us no, because I mean, some policies maybe should have been cleaned up by the discussion on silent cyber that are now at least in doubt of responding to pandemic risk as well. So I think we need to improve there and actually focus even more on that. And let's not forget, only when we have kind of cleaned up the silent coverage, we actually can provide affirmative coverage and also can collect premium for that. So there should be enough motivation for the insurance industry to really tackle that challenge.
So clearly, Munich Re has been bullish on the cyber insurance market for quite some time, and it sounds like with the pandemic and the transition to remote work, Munich Re remains as if not even more bullish. But I wanted to, think about some of the other demand-based lessons learned from the pandemic. I would note that in 2017, Munich Re established what was reported as the first dedicated epidemic risk solutions unit at a major insurer. However, take-up rates were reported to be quite low for that product. How do we ensure that cyber risk doesn't become another risk that enterprises need to buy but don't until a global systemic event?
Yeah, you're right. It was actually also around the time of Monte Carlo when we announced that we want to form this epidemic risk solution business as part of our overall innovation strategy, where we said there's a risk out there that is not really entirely covered. But as the name says, we wanted to focus on regional epidemics, not on global pandemics, because of the obvious accumulation risk, of course. And you're right. I mean, unfortunately, the market feedback was that there wasn't a high level of interest or acceptance of such a product. What were the reasons? Hard to say, of course. I mean, ideally, the customers would tell you, not us. But I would say there wasn't enough risk awareness of the pandemic risk. And maybe in that period, I mentioned before, there was a period of a continuous softening in the market. Maybe there was simply also not a preparedness to pay for risk that wasn't so obvious, that didn't happen every day. And there, maybe I'm hopeful that the starting point, of course, for cyber is differently. I think, as I said before, the awareness of the cyber exposure, I think, is bigger in the market with end customers. And if it wasn't realized so far, I think, again, COVID-19 is presumably the best reminder how important it is to be covered for business interruption. And therefore, this maybe should help us in better distributing the cyber product to the market. Of course, I think we need to be mindful of that we also there need to explain the coverage better, not only to customers, maybe even to brokers, so that the product is actually sold. And maybe we also need to think about how can we almost wrap the insurance product with some other add-ons, like with prevention services, with recovery services, to make the overall kind of offering more interesting for end policyholders. And of course, no doubt, at the end, we need to be able to provide a competitively priced product, of course.
Looking forward, Munich Re has been pretty bullish about the continued growth of the cyber insurance market as a whole, and your company has estimated that the cyber insurance market will triple between 2020 and 2025. I'm curious what you think about the supply of reinsurance capital to support that growth, and what role alternative capital and alternative reinsurance capital might play in supporting the growth of the cyber insurance market.
Yeah, so you're right. I mean, we are continuously positive about the development. First of all, from what we have seen in the past years, it has developed already. I mean, we started 7 years ago with a portfolio of less than 100 million. Now we are at above 700 million. So there is growth in the past years, and we are continuously optimistic because of the overall focus on digitalization, maybe even the increased speed in digitalization, that there's simply a need for that product. As mentioned, I mean, there are risks involved in cyber that are maybe so systemic that the capacity of the market could come to its limits. So I think there is a demand also to think about alternative capital getting involved in cyber. I would say, unfortunately, we're not there yet. Maybe we see the first signals that the alternative capital is showing some interest also in cyber products, and I'm sure in a couple of years there will be more. And as you said, I mean, we certainly also have to talk about private-public partnerships to overall increase the capital base provided to the cyber product, but also, of course, to reflect that maybe some exposure also in cyber will also maybe be influenced by governments and their acting. I mean, it's one of the risks as well when you think about cyber war, where we have governments involved as well. So these kind of risks are always difficult to be covered, not only from an accumulation perspective, also from a potential or from a capability perspective, whether we can actually assess the risk coming from governments, and therefore maybe public-private solutions could be a good response to some parts of the cyber risk as well.
Fascinating stuff, and certainly a lot more important developments to come in the years ahead. Stefan, thank you so much for your time today.
It was a pleasure, and I look forward to an interesting day at the NetDiligence conference.